you as organisations to meet both your return on equity, your cost income targets, but this wave after wave of regulation is hitting you, increasing expectations both from end clients, but also from your internal customers, your businesses, to be more agile, to do things for less, to be more responsive. And actually what I think has been fascinating in the last period we've got, starting with that, is actually how this consortium called Sentinel, a group of banks, are solving the MiFID II challenge. Is everybody familiar with MiFID II? That's a general, so this is Markets and Financial Instruments Directive, it's the second version of it, and it's the European directive really aimed at increasing transparency in pricing, if I put it very, very simply. I'm very delighted to have a panel session. Our guest of honour is Vincent Boulanger, who's an MD in Santander. I think Vincent will be talking on behalf of the consortium. We have Mike Connor, who is the CEO and founder of Appsbroker, one of our business partners that's building the solution, and Jeff Newell, who's the chief architect for Appsbroker, who's actually doing the work at building the solution, along with another partner called Adaptive. And I think, as Mike Connor's initials suggest, he should really be the MC. I'm going to hand over to Mike to ask the questions and have a little bit of debate around the solution and where it brings value to the marketplace.
Thank you very much, Adrian, and thank you very much for attending this event. When I looked at the schedule and I saw that the alternative for the Leaders Circle was to read HSBC, I thought, it's a terrible time. So it's great to see all you attending our session. So I'd like to start with Vincent. This is an interesting project for a number of reasons, but what does MiFID II mean for being compliant on time, mean to Santander Bank?
Before starting, I would like to say that I mean to say it's my personal opinion, not necessarily engagement by banks, so I want to make it clear to everybody. But I mean, MiFID is one of the regulations that has come out of the G20 commitment in 2017 after the market issues. So it's a European version of what's called in the US Dodd-Frank. I believe, my understanding, it's wider because Dodd-Frank was really limited into the OTC market and derivative market, while MiFID is covering the full asset classes from equity that was already under MiFID I in 2000, and then covering up to the OTC market, derivative market. So it's a much bigger regulation to address. And I think what we hear often is one of the biggest regulations that the regulation is facing in the coming months. I think MiFID and all the G20 commitment is all about transparency. So there is a huge part in terms of providing much more transparency to the marketplace in our activity. And also it's a lot about data and reporting. So when we look at MiFID, when I look at MiFID, I see two aspects into MiFID. There is one that is about capturing data in the different area of the workflow. And the second item is once the data has been captured, is data processing from the client inquiry up to the reporting to the regulator. So all around the chain, you are going to capture data, enrich data, and then at some point, reporting real time or reporting within every quarter some data to the regulator.
What happens on 3rd of January?
3rd of January, we have a set of quite long list of requirements to meet, and if we are not able to demonstrate our meet requirement, that could result in shutting down some part of the business. So it's a very, very hard deadline, and unfortunately, not like in the US, where the US has the possibility to delay some part of the regulation with non-action letters. In Europe, they don't have that capability, so we need to be ready.
So, can you talk a little bit about your approach? So, there's the concept of mutualising risk, cost, and interpretation of regulations. How did we approach it?
I think we have been looking for the last couple of years around software providers. So when we look at software providers in the front office, we see usually people that are very good in one asset classes, for example FX, that are very good into fixed income or equity, but we rarely see a provider that are able to go across asset classes. So we did a lot of work with that regard, and we thought and speaking with other banks, we were all facing the same issue. So it's a huge burn in terms of big. There is a lot of things to be done. The IP, the proper IP building the solution is pretty minimal, because we need to do it. It's not where we are making money, and nobody on the marketplace has got a solution that works for systems. So we did realize that, and we thought we met with a few banks, and actually we had all the same constraint and objective, and we started to work together early last year to say, okay, we have got an issue, let's see what we can do together to neutralize this cost. So to be able to meet the regulation, potentially at a better cost advantage, from a cost advantage perspective, and neutralizing not only the cost, but also neutralizing some of the knowledge that we can share between the banks. Obviously under strict competitive law supervision, but we find that it was possible potentially to do something together. So in April, we were a set of banks to decide to, okay, let's start to do a kind of proof of concept to work together between banks. In terms of collaboration, I don't know if people have worked some of the collaborative project between banks. I don't know. Some of yes. So we started. I mean, collaborating between banks is not easy. Or collaborating across industry within an industry is not easy. What we decided to do is that to have a phased approach of the project. So we did run small set of projects successively. So the first one was run over 6 weeks and had 2 objectives. First, to make sure that we can work together, because it's not worth to commit a lot of money if at the end of the day we figure out that we cannot work together. And secondly, and that was one of the objectives of each phase that we have done, that at the end of the phase we would have a concrete deliverable that the organization participating to the project would decide, okay, thank you very much, but that's it for me, or to go to the next stage. So we have done that over the months from April to October, November, where we had 4 or 5 different small projects between banks, where we were neutralizing the cost, aggregating different information and different requirements. So where we went through from gathering data model requirement, which is usually a big challenge. Then we went to in terms of requirement gathering. So across different banks, we gather requirements. And then over the summers, we run an intensive RFI up to 40 vendors to see if we had on the marketplace someone who would be able to help us. A core principle that we have through the initiative, it's all about IT. So I'm sorry for the vendors about what I'm going to say now. I think there is also a frustration within the industry that you have a vendor that doesn't understand what you need to resolve. You explain to the vendor what you need to do, they build a product, they license the product, and then you lose the control of the product. So I think we had an approach that what we want to do through the project is to keep ownership of the IP on the product. So it's up to the bank to decide what's the next step and where we want to go afterwards. So we run that RFI having this core principle in mind, and at the end of, I think it was in August, we had answer from 16 vendors of different items. We did a short list of 6 vendors, and at that stage, Appsbroker and Google were part of it. Then we got to 2 vendors. we run a proof of concept during the months of September, October. And at the end of which we selected the vendors we went. So it has been a quite a long process, but still quite fast. Because the difference between what we are doing in Santander and in other consortium that you can see is that here we have got a deadline. So we don't have the choice. We need to meet the deadline, so we need to find a way of finding agreement between the banks to progress quickly. So that has been the story up to December. And December we committed, a few banks committed to build the full solution together, and we are going through that building process at the moment. We are hoping by September we will have finished the development, and that should be allowing us to do that integration with our system.
Excellent, thank you. So, Adrian, Google, its commitment to financial services. Could you talk about how you and execs and you supported this initiative and collaboration between the investment banks?
Thanks, Mike. And if at any point you can't hear us at the back, just raise a hand or wave, because it's I know the noise keeps changing and varying, so we'll try and increase or decrease the volume. So I think that there's two aspects to that question. One is, I think you're asking how committed is Google to financial services, and then demonstrate that with this as a project. And I think the first is that at a macro level, it's very clear that financial services has a significant spend that we in Google would love to come to Google Cloud. The reality is, there's a little bit more to it than that. So it's not just about the vertical. It's actually, Google at its core are their software engineers, and they love solving problems. And actually some of the biggest, most challenging issues are in financial services. They're a challenge of regulation, they're a challenge of data privacy, they're a challenge of keeping data in certain countries and not in others. And so actually there's a view at the most senior levels that actually if we can crack financial services and help your clients, we will actually win together, and actually the other industries will be just plain sailing, and what we built for financial services and what we do for financial services will be applicable in many other areas. And I guess we've seen this over the last few years where a number of our senior executives have come from banking backgrounds. So our CFO is the CFO of an investment bank, our corporate CIO is ex-Morgan Stanley, Tariq is ex-McKinsey Consulting and Financial Services, and more we're hiring people who've got a financial services background. I think more specifically for Sentinel, this is seen as a precedent in terms of being able to do something very rapidly to help the industry. And it's not just solving MiFID, it's what this could then enable those members of the consortium to do with that data once this is up and running and we've got the 3rd of January out of the way. And to that point, our global sales lead flew specifically twice into the UK to meet with the consortium, talk about the platform and show his commitment. Tariq then arrived to have a number of conversations with the consortium members to really just support our direction in financial services and really address that question.
Okay, thank you for that, Adrian. Just a quick one for Jeff. Your team is building the application. Talk a little bit about how you agree requirements across multiple banks, how you're building it, the start, the delivery model.
Sure. So we're following an agile Scrum model. We've got teams. We've got 2 sprint teams working on a particular project. We follow like an 8-week cycle. So 8 weeks is we plan out like a straw man of the kind of functionality we're going to build. We take that to the banks. We run workshops. It's been challenging to get multiple banks to agree on a set of requirements, but I think MiFID II really focuses on what the objectives are. We work with a business analyst to get the requirements. Once we've captured those, we take them back to the sprint teams. The sprint teams can then digest that, they can seek clarification, they can ask them questions. They can then propose stories that map onto those requirements. Then we take those stories back to the consortium, and the banks can then sign off on the approach. And then we follow a 2-week cycle where we do the development, and at the end of each 2-week cycle we release software. We demonstrate that software to the banks, make it available for them for instant integration so they can rapidly see what's happening. And this happens time and time again throughout the entire project.
And just because we have developers in the room too, can you give 2 minutes just a little bit about the architecture and the Google technologies?
Right, so we're following a microservices architecture. We're building heavily on containers. We're using Kubernetes throughout the architecture. We're doing that primarily because we're interested in vendor neutrality. Google's also the market leader when it comes to Kubernetes and their offerings. So we're building on Kubernetes and containers. We're leveraging things like Google Cloud Pub Sub, because you can think about trade activity and the way it streams out to your trading desks. Being able to capture that and decouple that from your trading platforms is really important, and lets us do any kind of data processing that we need for analytics and reporting.
And I think one of the things when we did the big reveal of the proof of concept was that reporting and just what could be delivered very, very quickly and easily. Vincent, you're not an IT guy, you're not a compliance guy. You saw a way of advantaging your business by taking on this project and working alongside your colleagues in those two areas.
Yeah, because at the end of the day, when you look at the regulation, most of the work that you need to do with the regulator is reporting. So you need to have a set of clean data that are good enough to do your compliant reporting to the different regulators. And when you think about it, I mean, having clean data in the front office is pretty difficult. I mean, we have got data for our FX business, for the voice business, for the fixed income business, but we don't find, or it's very difficult to find in one single place all aggregated data. Not just aggregated, but clean data that are good enough for the regulator. So our point of view is that if the data are good enough for the regulator, that should be good enough for our own internal business. So again, that's my own opinion on that point, is that if you are moving your data with someone that actually understands how to process data and how to use client analytics, then maybe Google is not a wrong place to do that. And especially with all the new apps that we are putting in place, machine learning, client analytics, visualization of data, I think that when we have done our compliance project and we are comfortable with the solution, there is a huge range of different things that we can do with the data. I've been working since 2000 in the financial industry, and I've already found a challenge to find cross-asset class applications. I mean, everybody has tried, but I think not a lot have succeeded. Even with the fixed community protocol, it's still pretty hard to have across business line a single repository of data. So that's one of the challenges that we are trying to solve here, having a repository with different asset classes, different distribution channels in one area that we use for regulation purpose, but that can be used also for further purpose, either for other regulation, either for a pure business purpose.
Thank you, Vincent. Just we've got 10 minutes left, and we discussed actually opening it up to take some questions. Are you happy with me asking questions? We've got some questions that are going to be more interesting than mine.
Thank you. Would it be possible for you to say who the members of the consortium are?
Are they all about the same size?
No comment on that.
Any more questions?
How are you getting around the inadequacy of client data just for reporting, like that's or not? If you are setting it outside your own hosted data centers, what are the regulations around that and how are you getting around it?
I could probably answer that. I think it was around data privacy, wasn't it? And taking the day rate reorganisation. Yeah. So, MiFID II is all about transparency. So you need to provide that data to the regulator and also the public as well. So, that the information has to be available, and what better way to make it available than on something like Google Cloud?
And let me follow up, because what we haven't talked about, and you touched on regulators earlier, Sam, is just, I think the change we've seen in the marketplace, partially driven by the regulators, the FCA coming out with their finalised guidance last year, but also we're seeing it across the board. And I think that there is a consortium of banks we're working with to start looking at standards to support what the regulators are looking for in the US with E3C. We're also working with the ISOC organisation, which is the international collection of regulators, and how they start looking at cloud. And a lot of this is about education. It's about talking them through, how we ensure that data is encrypted, at rest and in transit, how we have segregation of duties. It's an education process. And actually, just the other day, I was approached by the BBA to say they were doing something very similar, and would we join, what they're trying to do around finding ways of getting through these kind of regulatory hurdles more quickly, and just getting awareness of what's going on. So, we have an international conference. I think it's going to be in Belgium in a couple of months with all the European regulators, where I'm going to talk to them about the issues that they're worried about and share a lot more of the things we do to make sure we look after your data and also protect your environment.
Just put your hand up if you want a question. I'm going to carry on as if you don't. But if you do, shout, put your hand up and I'll come across to you. So I think one of the things that's really interesting to me about this journey is this mutualisation of the interpretation of the regulation and you working in a consortium to fix something. And I think one of the things that I'm noticing is there's an awful lot of stuff that is non-competitive. That we're all being pioneers in the cloud together, but solo missions. And I just wonder if you could talk about your experience with building a consortium, building consensus, and actually getting momentum behind a project like this. And also, if you could follow up, Adrian, with other sort of projects that you're involved with. I know Jeff's working on some other projects that have specific tools for specific areas in non-competitive spaces. So you go first, please.
I think mutualization and building a consortium is not necessarily easy. I don't know if people are familiar with some of the swap platform projects that have happened in the past during following Dodd-Frank. There is one called Neptune, which is about exchanging data, inventories data with the buy side. So building a consortium is not easy because it's a tanker, especially with banks, right? It's even bigger than a tanker. So it's not easy to change direction. You need to find an agreement. But what we have found is that, and I mentioned that earlier, we have got one single objective, is that on the 3rd of January 2018, we are compliant. So any time that we lose before deciding to do something, we are putting at risk that compliance date. So that's a bit the stick that in the past, in other consortium, they don't have. We don't have the choice. We have to progress and we need to find a way of agreeing. Having done other consortium, I think that we have been pretty efficient in the way that we have progressed. I mean, let's remember that the first meeting that we had with the bank was in early February. We committed to do a first project in April, and in December we were building together. So I mean, this is quite challenging. Even if you look at your own organization, starting a big process in 6 months, that has been a huge achievement. I think that also what is working pretty well is that we went through different phases. So it was minimal commitment from a money perspective, with a deliverable at the end, and then a decision to keep going or not. And I think we have had bank joining and leaving, and it was good because some banks didn't recognize themselves in that project with the risk profile or whatsoever. But I mean, maybe it was a bit of Darwin, but we ended up with people that were really sharing that vision and working together. So we are quite a small group of banks, and I think that's better than being a big group because the decisions are taken much faster. and also there is an alignment to the objective.
Thanks, Sam. And I guess I just reflect, I was involved around turn of the century with the FX continuous link settlement, as it's finally been called, which started off being small. And I worked with Larry Gerson when he was at IBM, trying to corral actually what ended up being a large group of banks, and it was tortuous. But there was real risk. It's called the Hirschsprung risk if you were in the room, but we don't talk about it very much. But there was a real risk that FX transactions would not get settled. And in fact, on occasion it did happen. And so there was a real driver for those entities to get that job done. But actually, I think what you've done with Sentinel has been amazing to drive through an actually really short order, a collaborative approach that's got those banks on board and moving forward. And I guess there's just a number of areas where banks are now talking to us about actually could we join forces, and I think there are just some key ingredients, aren't there? It's about having something that's really compelling, that everybody can get on board with and has a firm deadline to make things happen. I think that's really the key thing. I think the other thing, just thinking about collection of data, and it actually gives alpha to some of our clients. We're doing some projects with Thomson Reuters, and actually Citigroup have talked about what they're doing with that, where actually Thomson are putting a lot of their tip history into our cloud and then allowing clients to access that data. Because the power of our technologies like BigQuery to analyze it, some of our streaming technologies, those clients are getting alpha from that, but in a way the data is being not quite mutualized, but it's being made available as one storage of the data, being utilized by many different entities.
So Jeff, you've recently hosted our first data lake conference. Jagulandro, Vincent, other customers came. That was interesting watching people coming together with their ideas, deciding what sort of tooling, etc., needed to be built and how things like data ops could be mutualized. Could you say a little bit about, a little bit more than I just said, about bringing this together? Because it has been a surprise to us just how open people are and how these collaborations work.
Yeah, I think the point is it's a fast-moving industry, and how we're dealing with data streaming in real time kind of details is completely new for all of us, and we're working across multiple customers to come up with common tooling, common products, and then we can utilize the cost as well across our customer space. I think it's a very fast-moving industry, especially with like data flow and some of the machine learning offerings that are coming out. There's real opportunity to mutualize that cost.
So we've got 1 minute left, so there's a last chance for a question. Oh, we've got one. Fantastic.
Slightly important question. Why Google? Because in financial services, legacy systems are primarily Windows, Microsoft, and so on. And FCA, BOE, ECB, they're all tendencies towards those systems. Why Google?
First, we build a system from scratch, so there is no legacy system on which we are going to work. Yes, we have integration, but there is no. It's a build from scratch, right? Why Google? When we started the RFI process, two others, cloud provider were involved, and the two other providers came to us and say, okay, when you figure out what you are going to do, call us back. Okay. While I think the approach with Google has been much more partnership and directly much more engaging, and we felt that they wanted to do that project with us. And in terms of the next step, once you have put your data together, right? I think the suite of tools that you can build in your ecosystem in terms of machine learning and all the other analytics tools are potentially better on the Google side. Again, that's my personal opinion. It's not a view of necessarily of my bank. But I think that there are opportunities, and I think what was important is the engagement model with Google. we did receive a strong support from the top management in the cloud on the cloud side of Google, and we have been working well together.
I think the other thing, just to finish off your comment about Microsoft, is there are a whole range of Microsoft products that run really well in our cloud. So give it a test. I'm conscious we've run out of time.